It has been a rough few months for crypto investors. Bitcoin, the world's biggest digital coin, is down nearly 70% after peaking at $69,000 last November. Many other cryptocurrencies have dropped even more. From a wave of high-flying Super Bowl ads in February this year,
it's a safe and easy way to get into crypto.
To a crash 3 months later,
we are in the middle of a crypto winter.
The crypto market is in turmoil, which begs the question, why has it been so volatile, and when will it stabilize? To help answer that question, we must first unpack what cryptocurrency is and how it works. The first decentralized cryptocurrency, Bitcoin, was born out of the economic turmoil of 2008 financial crisis. At the time, investors lost confidence with how government and central banks were handling funds, leading some to seek out alternative investment opportunities.
So, Bitcoin was invented as a kind of pushback against the system, as part of the whole movement that was growing up at the time to dispense with the old system of banks and the old financial system that was letting us down.
This new form of money is open, trustless, and permissionless.
It's the people's money. It's everybody's and yet nobody's. Nobody can decide what happens to the printing of Bitcoin because it has been predetermined by the algorithm that only a certain amount of Bitcoins will ever be created, and they will be created bit by bit. And if governments say we need more money, we want to pour more money into the system to manipulate our economies, if Bitcoin was the currency of those economies, they simply wouldn't be able to do it.
While this new currency was created to fight for a more stabilized financial system, crypto has had a volatile trading history since the beginning. Its first significant price increase started in 2010. When a single Bitcoin jumped in value from just a fraction of a penny to 9 cents. It has then went through several cycles of up and down as investors and traders betting on ever-increasing price to build wealth overnight. In January this year, with historical high inflation and sliding stock market, crypto's story has again changed. The hashtag crypto crash trended for the first time on Twitter after Ethereum and Bitcoin dropped over 10% within a day. With fear of recession raging, investors start dumping risky assets in their portfolio. And crypto, undoubtedly, is high on the sell list.
I think the economic situation contributed heavily to the fall of both tech stocks and cryptocurrencies. Of course, there was lots and lots of money printing going on over the years. And then when the money starts drying up, when the central banks start indicating that they're actually worried about inflation and they're going to have to start tightening the monetary noose and raising interest rates and doing what we call quantitative tightening in the United States, withdrawing money from the economy, all of that contributes to people having less money to put into things like cryptocurrencies, because frankly, they don't see crypto. Most people don't see cryptocurrencies as like an essential thing. It's not like buying food. You've got to do it. It's kind of what you do with spare money, extra money. And now there just isn't so much spare money around.
The price crash accelerated in May and June after two significant tokens, Terra and its sister coin Luna, collapsed.
And the losses from those blowups led to cascading drops in prices as investors who lost money in one thing then proceeded to sell another thing to raise capital.
So looking back to those volatile trading history over the years, here comes the question. Why is this market so unstable?
Cryptocurrencies are relatively new. Nobody knows how to value them. So unlike, say, if we look at the stock market or if you look at real estate, there are generally accepted models for determining what they're worth. Most cryptocurrencies don't have that. Everyone's guessing. And that means that prices tend to overshoot on the way up and on the way down, because when they're going up, people think they're going to keep going. And then when they fall, people think they're going to go to zero.
Despite the recent volatility, Glenn Goodman says the crypto market is slowly stabilizing.
If you look at a logarithmic chart, which smooths out the percentage moves over a period going all the way back to, say, 2012, which is when we first got reliable Bitcoin data, then you can see that the curve kind of goes like this over time. It's actually flattening out over a very long period of time. So I would expect that process probably to continue. And as more and more money gets into the crypto space, the prices will become less volatile as the markets become more liquid.
Omid Malikan believes that the recent upheaval will be good for crypto market in the long run.
Because it's refocused everyone on the industry, on the first principles, on thinking long and hard about what applications crypto is useful for, and then being more focused on building the actual application than in raising money or speculating. It's a little bit like if you think about how in nature, as devastating as a forest fire is, it's part of the process of renewal in that it eliminates the weaker trees and it creates new fertile soil for new seeds to grow, and then you end up getting a stronger forest as a result. Crypto crashes are a little bit like a forest fire. They're very violent when they happen, but they create the foundation on which stronger projects could be built.